Hey, welcome back everyone to Lunch at the Market. We're totally excited to come to you live from our Lunch at the Market page, which is on our new look website at magnumopusfinancial.com/lunch. Okay, just go to magnumopusfinancial/lunch or go to our homepage at magnumopusfinancial.com, and then right at the top you can click on Lunch at the Market and it'll take you to a page where we got all kinds of stuff. All right, so it's April 1st, and it looks like the joke is on F5 and Riverbed. Ouch. Both names are down 7%. At first, it looked like on nothing, but apparently, really smart people with lots of money who get research reports. There's Oppenheimer, UBS, and William Blair all put out bearish notes on F5. And then Riverbed just got sold off because F5 sucks, right? That's how it goes. It's pin action, except in a negative way, right? They're all getting painted with the same brush. Kind of like hotel stocks all went down, and then Jim Cramer had the Starwood versus Marriott last night on Mad Money. Okay, so with the same things kind of happening right now. The interesting thing about the note is that nothing about the fundamental business about F5 has changed at all. It's just their concern is that analyst expectations are too high, and they're trying to warn investors that the numbers might need to come down. They also said that there may be a material effect to their earnings, maybe around $7 million, that gets lopped off thanks to what happened in Japan. So, April 20th is your day. Until then, expect the stock to be weak because there's no good news coming out, and because we're all just sitting around twiddling our thumbs until earnings come out, which is the mother's milk of stocks. Larry Kudlow likes to say that. I kind of like it. And it's true. At the end of the day, the P, or price, of a stock is just a function of M, the multiple, times E, the earnings. So earnings times market multiple equals price. And right now, it's getting lower for F5 networks. It's getting lower on both the PE ratio and the price of the actual stock itself. Well, the PE ratio is just the M, right? It's the multiple. P divided by E equals M. PE ratio equals M, which stands for multiple. Right now, F5 is trading at 21 times forward earnings. If the stock gets any lower in price, then you're going to see a stock that trades in the teens for a PE ratio. That's insane for a company that, at least for right now, until the 20th, seems to have abnormally large growth, or at least better than average growth. So right now, these three shops have a market perform or a neutral rating on F5. They're basically saying this is too hard for us. We're not going to call buy or sell. We're just going to say, hey, it's going to do what the market does, which it's not doing right now. It's actually going down when the market's going up, which is why we're okay selling some put spreads against it, because we've got nerves of steel. If you don't have nerves of steel, here's what you want to do. And this is actually what we're going to do anyway. And you'll have to go back and look at Deckers to see how we resolve this trade. So basically, we want to look at the May 95.90.85 put butterfly for, I think it's about 50 cents. That's pretty cheap for protection on F5. And you're going to get protection dollar for dollar from 95 down to 90, and then from 90 to 85 you'll be short a put spread. So depending on where the stock goes, the stock could blow totally through 90, and as long as it stops somewhere above 80, say it stops above 86, 87, then you have a profit. Not bad. The other thing you can do is capture your profit on your long put spread and then roll your short put spread down and out. The other thing you can do is simply go to the 95, 85, 75 put butterfly for $1.85 in May, and for $1.85 you actually get $10 of protection. Dollar for dollar from 95 down to 85. Bam, that thing can go all the way to 85 bucks, and you can turn your $1.85 into $10. That's a pretty good risk reward. You spend $1.85 to possibly make 10. Remember, you have to be bearish in order for this to happen. Okay, what's trade repair on these long put butterflies? Duh. A put butterfly is, imagine the wings of a butterfly, right? So the middle strike is 2 times, the outer strikes are 1 times, and right? So there's where you get your wings at. So you're long 2 95s, short 4 90s, and then long 2 85s. And that is the put butterfly. Kind of feel like Jim Cramer right now, except I don't have a prop department with an unlimited budget. Anyway, that's another story. So we like either into earnings, which are on April 20th. Remember, you got to go out to May expiration, because if you do this in April, it's going to expire before earnings come out, 5 days after options expiration. Okay, so that's the trade on F5. Trade repair is, remember our butterfly? You're going to, let's say this is the butterfly. I like to imagine options vertically, right? So this is the 95, this is the 80, and then this is the 85. You're long these, you sell them, and go buy, bing, the 75s, right? So it looks like this. This strike gets sold, disappears, and you're just simply long a put spread, which we do those all the time, so you should be totally used to that by now. All right? So it just looks like this. You kind of just rotate it, right? I know. Look, we'll get a bigger capital budget this summer, and we'll do some of this stuff a little fancier. We'll get some visuals and some charts and things like that. It'll be great. Until then, you have finger charts. So the moral of the story is, put butterfly from the long side on F5. Should protect you in earnings. Make sure to do it in May so you don't miss options expiration. On to US Steel. What a trade that was. Stock is up 40 cents today. Look, we just need it above 52.5. We don't need the stock to go to the moon. You just have to make sure it's above your strike where you're short by options expiration, which is not too long from now. In fact, it's 2 weeks from today. Okay? So we're short the 52.5, 50 put spreads in both April and in May. Cha-ching. Those should be just fine. 52.5 has been support on the stock for probably about 3 months now. It's banged up against this level before and bounced off. So far, that's what it did yesterday after the downgrade. Lost about $1.74, and it's starting to work its way back up. Look, U.S. Steel has integrated iron ore, which means they can source their own iron ore. So if iron ore prices go up, that benefits U.S. Steel because they can produce their steel at a lower cost than their competitors who actually have to go out and buy the iron ore, right? They need the raw material to make steel. That's great for U.S. Steel. Also, prices are firming up. And again, Japan equals more steel, not less. So that's why we like U.S. Steel. We continue to sell these put spreads against our long January 2012 45.55 in the money call spread on U.S. Steel. Hopefully it'll go back to all the way above 55. That'll be a $10 wide spread. We've been selling put spreads against it the whole time we've owned it, so we're getting our cost basis down. Next trade is Goldman Sachs. Look, anytime the stock is below 160, that's your level to get in, folks. We sold those 155, 150 put spreads yesterday when the stock was trading around 158. Before that, when the stock was around 156, we sold the 150, 145 put spreads. Both of those should expire worthless. Again, your bogey to either get long Goldman Sachs or to sell those put spreads is when you see the stock below 160. Every time it has, it's been a buying level, kind of like when BMI, Badger Meter, gets below, I think it's 40. Don't quote me on that, but I think it's 40. When Badger Meter gets below 40, especially around 38, you can take it from the other side, meaning you can sell put spreads against it, or you can get long below 40. But that's worked over and over and over again for Badger Meter. It continues to work at the 160 level for Goldman Sachs. That's your level to either get long or sell the put spreads. All right, thanks for joining us again today on Lunch at the Market. Remember, Lunch at the Market now lives at magnumopusfinancial.com/lunch. What else will you find on there? All the back issues or episodes, because we're not really a comic book, but we work like a comic book. If you miss an episode, then you get left out and you miss trades, which could result in dollars that you could have made. So tune in every day for Lunch at the Market. Check us out on YouTube if you miss us live. And then we're going to have, if you like it in writing, some people like it in writing. You ever heard somebody say, can I get that in writing? Yes, you can on Lunch at the Market. We're going to have a link to the stockpicker.com Lunch at the Market website, which is fantastic. You can get everything in print. It's always a little different, so we like you to tune into both. The video is not the same as the script because I don't pay attention to the script, even though I write it. All right, thanks for tuning in again today. Have a great day. We will not see you tomorrow. We'll see you on Monday, so have a great weekend. Thanks for joining us.